Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Tuesday, January 5th. Okay, yesterday we had a little more excitement than we had anticipated in the morning. Quite a bit of selling. They really faded that green opening. So let's see if really any lasting damage was put on the charts yesterday, and see kind of the levels that we want to focus on today, both for longer term daily swing traders and for active traders as well. So starting with the SPY daily chart, we were in this wedge. We came right up to the top and tagged that firmly on that green open, and then they sold it off and brought price down to the bottom of this rising wedge. Actually looked quite a bit below and then recovered. It's probably a little hard to see, but we've got the 20 EMA here, in this blue line here is the 20 EMA, and it comes up to coincide with this lower level of this wedge. So it probed deep below the 20 and then recovered that level into the close. I think from a swing trading perspective, I think that the 20 EMA that's sitting at 367.70, you can say 367.5. That's not a big deal, 25 cents. I think as long as it holds to 20, on a daily closing basis, you can maintain your longs against that level. But if we were to break, drop down below the 20, I think you can almost guarantee a tag of the 50 down here at 360, and probably even a move down towards 355, which was the original breakout level. You know what? I forgot my pointer. Let's get that going here. Sorry about that. See if it can generate itself here. Here we go. Sorry about that. Anyhow, back on topic. As long as we can hold the 20, I think we're in good shape. A drop and close below, coming down to the 50 at 360, and then probably even down to the this breakout level at 355. Now, also notice that big red candle was a bearish engulfing candle, and what made that happen is the fake break above and then close below, so it engulfed all this price action. It's called a bearish engulfing candle for a reason, right? So today, what would lend credence to further downside movement is a follow-up red candle. And if we got that, then I think we would most likely be closing below the 20, and that would be a bearish development. Yesterday, we can hold our position, our posture as a one-day wonder, a one-day event with no sell signals really being generated. But if we were to get a follow-up red candle closing below the 20, I think we'd have to reassess that and possibly even play for some downside in the days to come. If we look at the 2-hour chart, this is the kind of thing that that really gets me going. Here was the fake breakout and then the rug pull. Look where it stopped. I mean, this line was there. It stopped right on a dime. You know, we had a bounce candle and then a look below, which they recovered. But that even further validates this 367 line as being important. So now for today, and we of course filled this gap, which I will remove after the video. But a couple different scenarios. I mean, we're barely green now. As I start the video here at 20 to 7, we're up just, 0.2%. Couple scenarios. One, they just sell the open, and bring it back down to either test 367 or test the prior low down here at 365 and just keep going, where we would find support down around 363. Another scenario is have an initial burst higher, back test this breakdown, then roll over at 371. Or if this truly was just a one-day wonder, if we recapture the lower trend line here, that would definitely be bullish and a place where you could get long for a move higher, a continuation higher. So on the bullish side, if we open green, I think you can be long against this 369, which was the bottom of the gap. Use that as your support. Look for a move up to 371 and be ready to take it off, take your profits and see what happens. But if it can punch through 371, that would be your second level to either add or initiate a new long position if you didn't get it in right at the open. Here's the 30-minute chart. Again, just an exploded view of the false breakout and then the rug pull. And I made a note here, a fast move from a false move. We've seen that play before. I mean, even just recently on Expedia, we had a breakout from a consolidation range. It went out, had a topside breakout, and then they immediately went the other way. And that is a bearish move. And what you often see there is a quick move down to the bottom of the prior trading range, which we got. And then we also got follow-up selling to fill this open gap and even more. So that was a pretty significant liquidation here. And then, of course, they ramped it a little bit into the close. So we'll have to see if they can continue that bounce move to recapture 369 and 371. That would be bullish. Or if price runs into trouble here and gets rejected. The Qs, very much the same kind of a look on the daily chart. We had the rising wedge, the break below, a probe below the 20 EMA, which sits at 307.50, and then they closed just above. So for you, daily time frame swing traders, I think 307.50 is your pivot. As long as we can hold the 20 EMA, I think we're in good shape, or the bulls are in good shape. But if we were to drop below, I think coming back towards 302 and then the 50, which is at 299, would be in the cards, and possibly even back to 297.50 where the original breakout occurred. We had this is another bearish engulfing candle. Notice it engulfs the last 4 days of price action. So if there's a follow-up red candle, that would confirm this sell signal, and then I think we'd have to be looking for lower prices going forward. And remember, we've got that Georgia election tonight. The market may be in suspended animation today, waiting for that result. I don't know how important the market may view, a Democratic outcome or a Republican hold. It may just oscillate here today, waiting for that news, and then tomorrow, decide which way they want to take it. But again, we've got the 20 right there. And then here's the 2-hour view. Stopped on a dime right here at 307.50 and bounced above. Today, I think any pullback into 308, you can be long against that level and look for a move higher. But anything below 307.50, even 308, I think you can be short with a stop just above. If they're going to sell it off again today, there's room down to this 301, 302 area where I'd be, covering for sure. That's another $7. That's probably a lot to ask for in one day, but they sold off $7 yesterday, starting at about 315, and then they sold it off to 308. So that's 7 right there. So be ready for either a move higher or a move lower. It's hard to tell at this point what they want to do. You can see here they closed the gap, and I think a recapture here of 310.50 would bode really well to get long right there on a break above or recapture that 310.50. There's not a lot of trades in this zone here, and I think we could get a quick move back up to 312 if we get that break above 310.50. Again, here on IWM, they tested the 20, which sits at 192.50. So that's a clear pivot point on the daily on IWM. I would key off a 192.50. As long as it holds that level, bulls are in good shape. But a break below opens the door to a 50 EMA test, which is $10 below. If you see a break below this 192.50, let's look at the 2-hour. If you see a break below this 192.50, I think you can get short there and look for a move down towards 188, 186 down here where there was prior support. That would be a nice trade. And I think the key is that that 193.50 area right here, which corresponds to the 20 EMA on the daily. Here you can see it again in more of an exploded view. On the 30-minute chart, there is some support down at 189.50, but that's $4, and then we'd have to see, if that held or broke. But then there's another $3 or $4 below that before more key support were to come in. Facebook. We talked yesterday about 273, being the pivot. Here was the head fake bar and then the break below. And like we said, a break of or anything below 273.50 favored a move back down to the bottom of the box, and that's exactly what we got. If you got that trade, kudos to you. That was a nice setup. But you had to be quick, especially if you took the long on the breakout. You'd had to switch your mindset very quickly and get out of that trade, and then flip short to capture that. And that was a nice move. I mean, from 273.50 down to 266. I mean, that's $7. That's a nice move on an intraday basis. And we had the levels all keyed in there. Now today, any move back into 266, I think should be bought with a stop just below. Anything below 266 is a short, and would be very bearish, because look at the width of this trading range. It's what is that? $15. So $15 from 266 puts you down at 250. So that 266 level is very, very important. With price right here in the middle of this little range, I think you can get long above 270 and then look for 273.50. If 273.50 could be recaptured, then you can look for 280. So these zones, these levels have been working really well, and you can see all the tags and holds at 266. So that's what makes that a very important level to hold for Facebook. Apple had a junk day. If you recall, there was a gap right in this area. We had the move higher, which was fake, and then they sold it off and actually came down and filled this lower gap. So on Apple, the gaps have been filled, and I think anything north of 128 will be a positive. But as far as initiating a new position, or an intraday position, I would like to see this 131 taken out, and then I think Apple will be back on track for a move towards 134. If we get a move higher and there's a rejection at 131, and you'll have to play that by ear, you'll have to watch your candles. If you get a move into 131 and it stalls, you can initiate a short with a stop just above and look for a move back down to possibly recheck yesterday's low down at 128 or even 127. That would be a nice objective level to take a shot on the downside if you saw that the initial push looked like it was failing. Tesla had a nice day yesterday, gapped higher and then consolidated the rest of the day. You can see the gap levels, 717.20 down to 705. I think anything above gap support, you can buy it. A pullback into 717, you could buy it there and look for a move higher. Right here in the middle of this area might be a tough trade to take. There's nothing really objective there to shoot against, unless you want to just shoot against yesterday's close, which was, for all intents and purposes, 730. You could be welcome to do that and look for a push up towards 750. Microsoft, junk day. Here was your fake move higher into this 223 pivot, and then it just let go. Came down here to 215.50, and then recaptured this 217.50 level. I think for today, as long as it holds 217.50, I think you can be bullish and look for a move back up towards 220. If it were to recapture 220, I think that's a place you can either add, certainly move your stops up, or initiate a new position at 220 and look for a move back up to 223. But if it drops below, if you see selling come in and it loses this 217.50 on the downside, I think you got a short there, at least to retag yesterday's low and possibly even come down here to this 212 level if if things get squirrely later on this morning or this afternoon. Amazon continues to respect these $50 levels. Here was your fake move higher. Your move back below 32.50 was a clue to get short. And then you had a really nice trade there. You had a $100 trade down to 31.50 and then a little bounce. So today, I think you key off at 3,200 and 31.50. If price can recapture 3,200, I think you can be long and look for a move back up to 32.50. But if it gets rejected there at 3,200, I think we're going to come back to 31.50. So continue to use these $50 increments that have worked so well for us on Amazon. Google is kind of a mess. I mean, to be honest, came up here, fell back below the midpoint of this trading range, then went down to explore and break below the bottom of the box, and then recaptured into the close. So I think you can be long against 720, but anything below that level, I think you certainly need to exit your longs because I think you're probably going to come back down here towards 1700 and test the top of this gap. The only way to play it off the open is against yesterday's close and then see if you get a move towards 1755. But it's not, I mean, that's not really a quality long setup here in the middle of the range. I'd like to see, a pullback to 1720 where you can get a much tighter entry for your long try. Netflix. This was a real nice study in technicals. We had this lower channel drawn in, and on the sell-off, price came right back to this trend line and stopped on a dime. You can see it there, and then had a little bounce into the close. So today, I think 525 is your long pivot. A break above that level, get long with a stop just below, and look for 535. But if price were to lose this trend line, say at 517, I think there's a good chance it may come back down into this 505 area once it breaks this trend line, this channel, good chance there's more selling towards 505 and then 494, etc. on the downside. One individual chart I want to show you. This is something that we flagged last week, might even have been before that, but the 65 level has been key support on this chart ever since the beginning. We had a tag and hold here, we had a tag and hold here, and then we had a hold here for several days, and then yesterday I let go. So, now this chart is on super short watch, and what I mean by that is, if you take the projection of this big descending triangle, it points way down here, into the, into the 30s. So you can play that one of two ways. You can either try to get short now against 65 and be okay with a back test, have it come back up here and then roll over, or just watch it closely and see if there's a green day where price will come back to double check the scene of the crime here at 65, and then that would be your place to initiate your short, because now all this price action becomes resistance on the way back up. So if you can get a green day, get price a little closer to 65, you'll get a much tighter setup and have your short entry. I have not looked at earnings, so before you do anything, make sure you know where earnings is at. I don't think you want to hold this one through earnings. But I think it's out in February, so I think there's plenty of time to do a trade on this for some potential significant downside. Okay, let's wrap it up there. What I'm going to do this morning is look at the precious metals. Gold and silver are making bold moves. Some of the silver miners, and to a certain extent, the gold miners are starting to break out. I'm going to see if we've got any objective trades there and then pass them on later today. So, review your levels. Be aware we've got the Georgia elections tonight. Take the price action today, with a grain of salt, because if there is a catalyst, that'll make itself known tomorrow. So stay nimble in your positions and respect your levels, respect your stops, and have a good day of trading. If you're new to the channel, please hit the subscribe button so you can get all the content right to your mailbox each day. You can also look over in the links in the show notes for links to the blog site and also to register for my content, where you'll get everything I publish delivered right to your mailbox, along with a invite link to our Slack trading room, where you'll meet and interact with a lot of really sharp traders who are very generous with their ideas. Lots of good interaction there and good camaraderie amongst aspiring traders. So please take advantage of that. So until then, till we talk next time, this has been Chris Butts with Traders Profit Compass. Have a good trading day.